morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of TrueLayer, Francesco Simoneschi. Great to have you with us.
Hi, Elliott. Hi, everyone. Thanks for having me.
Wonderful. Okay, so before we get cracking, we are going to learn a little bit more about TrueLayer. So, Francesco, you're one of the pioneers and leaders in Europe's open banking space, processing something like $150 billion a year. Tell us more about the business and what sets TrueLayer apart from others in the API and payment infrastructure space.
Sure. We are a payments network. In 2016, when we started, we had this big idea that connecting with every single bank in Europe would have created a network, a payment network that can go and challenge the Visa and MasterCard, the card schemes, right? And that's precisely what we did. We do work with many of the big merchants around in e-commerce and many other industries around Europe, like the Amazon, eBay, Just Eat, Ryanair, Revolut. And what we do for them is we allow them to accept payments as an alternative to Visa and MasterCard in a way that is much more efficient and utilizes real-time settlement network that do exist in the UK and in Europe in order to make money go much faster.
Right. And it's not just the speed, is it? Because presumably, with Visa, MasterCard, I'm not sure what the exact amount is in Europe, but, one of the big criticisms leveled at them over the years has always been the high costs, the high charges that they levy for the use of their cards onto the merchant. So presumably paying by bank from bank to bank is much cheaper and therefore saves everyone money in the long run.
That's absolutely right. We believe that more competition just naturally helps reduce fees and costs. So now when you look at the entirety of different services you need to use in order to process cards, it's not just the interchange. That's one part of the equation, but we look at the total cost of managing payments. So it's the chargebacks, it's the risk tools, it's your PSP, it's your tokenization services. Everything together, they all adds up. It's effectively like a layers of different fees and charges that every merchant of any scale will have to incur. And so what we do is that we really cut off all the intermediaries and we go straight direct to the banks. We leverage real-time settlement network so we don't have to manage risk precisely as cards have to do. And that trickle down into efficiency. And this efficiency create what, it's consumer surplus. So the ability for merchants to then go and reward and effectively kick back directly to consumers. So it's a win-win. The merchant wins, the consumer wins.
And where are you seeing most growth right now?
Yeah, we see a lot of growth coming from e-commerce. So consumers will look at that through the lens of pay by bank. This is the, if you want, is the name of the payment method. So when you are at checkout, you will see pay by bank. You will probably recognize the logo of your bank or many of your bank, and then you just click on that, and you get a link into your mobile banking app. You do Face ID, click a button, and it's done. And so you don't have to look for digits on a plastic card or actually enroll into any service. We believe it's a pretty neat user experience as well, right? And so it's very much on par with maybe an Apple Pay user experience where biometrics are used. So it's also as secure as those other payment experiences. And of course, this is growing in terms of adoption. In the UK, we see a lot of big merchants now coming up to market with Pay by Bank.
And I can testify to that because just a couple of hours ago, I paid off my credit card bills and it went to Pay by Bank. Although there was an issue with one of my banks for my company, but we won't go into that because it probably wasn't their fault. Look, TrueLayer was I suppose built to capitalize on these open banking regulations like PSD2 back in the day. I think looking back to 2016, when you and Luca Martinetti co-founded the company, did open banking evolve the way you anticipated it would back then, or has it required you to kind of constantly pivot and kind of change course to deal with unexpected consequences, or just the way that things have panned out, which weren't necessarily in line with the way you expected them to?
Yeah, I think we were, when you're an early stage founder, you're massively naive about everything. I think we were absolutely incredibly naive about this space and just the speed at which the banks would have moved and how much everything would have worked out of the box. I think we are still spending a lot of time getting the whole experience, the infrastructure to be mature enough and scale with volumes. Because of course, in payments, it's not just a problem of you build it once, but then you need to follow up when volumes and performances of big merchants, big events are starting to come into that infrastructure. And this is where clearly, I think the regulator probably at the very beginning wasn't expecting this sort of amount of work, and probably also the banks. But here we are. So we had to really put in the time and a lot of education with the banks, with the regulators, to try to build commercial frameworks, technology, regulatory frameworks as well, in order to have everything coming together.
Right. And just very, very briefly, because I want to move on to the next section, but you've raised over $320 million from really impressive backers like Stripe, Tiger Global, you're a unicorn. Is that it? Do you need to raise more funds, or you now got enough and you're going to just become a big, profitable, financial services company?
Yeah, I mean, you're right. We raised capital in the past, and I think raising capital was for us extremely beneficial to being able to build all this infrastructure. I think one of the traits of fintech, especially the kind of fintech that we do, which is more like APIs, infrastructure, payments, requires a lot of build out initially. So it's sort of expensive at the very beginning, but then you have a lot of leverage because things start scaling with marginal costs starting to diminish. And I think that's where a lot of the durability of what we are building comes from, which is volume, which is our market dominance. So we are in this nice position of being effectively operating and being in control of our destiny. That of course doesn't prevent us to go and raise capital in the future, but I think we are in a good place.
All right, so a somewhat inconclusive answer there, but anyway, Francesco. So look, we've heard about TrueLayer. Let's now learn more about Francesco. So, Francesco, before TrueLayer, you co-founded the angel investment fund Mission and Market. I think you made over, plenty of investments going on there. What do you prefer, investing in startups or building them like you are at TrueLayer?
I think I have the definitive answer that is much more fun, in my view, to run companies than being an angel investor. I think angel investing is super fun because you meet all those different personalities, and in a way it's your ticket to be part of maybe another story, right? So I'm very hectic, and personally I like to do many things in life, and so that is a little bit of a way to have a look at many other things. But as an operator, as a CEO, I think that's the best job in the world, frankly. So I would never trade one for the other.
Okay, well, I'm going to pick you up on what you just said there, which is that you like to do a lot of things and things are a little bit hectic, because on the Mission and Market website, and I don't know if you were just kind of being tongue-in-cheek here or if this is all true, but your bio says, and I'm quoting here, in a previous life, you were a professional tenor with more than 300 live performances in Europe and Asia. In his spare time, he plays the violin as a sailing enthusiast, and more recently, he has dedicated himself to surf on the coast of California. Is all of that true?
Yeah, it's true, and though maybe the surf is not true anymore because I don't live in California anymore. Even though I really love to surf, and even more recently, I bought a board which I keep in Italy. So when I'm
Okay.
there during the summer, I try to surf there, but it's not the same. California,
go down the mountains instead on the board. But tell me about being a professional tenor. I mean, with respect, I mean, you weren't in the league of a Pavarotti or one of the other ones whose names escape me. So tell me about that. What were you? How was that? Why did you give it up? Or if you did give it up, and why didn't that prove to be the path for you?
Yeah, that was a while ago. I have to say, I had this sort of unique experience when I was really, really young, at 10, 11 years old, to be in the Vatican choir in Rome. So effectively, I started music very early in my life. And all the way up until I was probably like 27, 28, I kept singing. And so going from like, a very young singer into more, in theaters and concerts and stuff. So, but at some point I think like, you have to focus on one thing. And so it's a nice hobby. I don't know, it's a nice passion, but also I like to run companies.
But forgive me, this was just a hobby? Because it says here you were like doing live performances in Europe and Asia. Was this not something you were doing semi-professionally, or you were just kind of going with various choirs as, as something that you just enjoyed as a pastime?
Now I did it more professionally. And so with like professional establishment in, again, theaters and performing. But I think at some point like there was a fork in the road where, you either go full pro, and I don't even frankly know if I was capable of going full pro or not, right? And I think I just made my choice. But I still, sing under the shower. I think like, I like to sort of like
give a private concert to your family.
Exactly.
And so, like when you're out sailing or surfing, do you kind of like sing as well at the same time, or is it kind of like one hobby at a time?
I only do one at a time.
Okay. All right, wonderful. Well, sounds like it must be non-stop entertainment at TrueLayer there. But look, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we are going to continue our conversation with the co-founder and CEO of TrueLayer, Francesco Simoneschi. And welcome back. Don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, and now, Francesco, let's talk about the future of finance. So open banking is often viewed as just the beginning with open finance or smart data as the kind of final destination. How far are we from a world in which consumers have total seamless control over data for mortgages, insurance and pensions and things like that?
We are absolutely like much closer than that. I think like regulators around the world, if you just step out from just Europe and the UK, and if you just look at the broader picture, you have a lot of frameworks that are increasingly opening up access to data. That happen in Australia, that happen in Brazil, for instance, is happening in MENA, Saudi, and so far, and more places around the world. And here in the UK, there is a whole regulatory agenda, which is very much in line with what the government has said they want to see that happening, which is opening up like smart data, which means like a lot of different, not just in financial services, but a lot of different industries start opening up identity data, usage data, and more. I think in an age of AI, where like people can really leverage their own data and then add some sort of like quick, immediate way to reason around their data, I think this is going to become insanely powerful.
Okay. And I mean, we've talked a little bit about this already, but I mean, we still, when you're paying for things, whether you're using one of the wallets, whether it's Google Pay, Apple Pay, or, just paying in general, people still tend to use cards rather than anything else. I mean, what needs to happen for bank-to-bank payments to become the default for the average shopper and to kind of have that as an option alongside the traditional ones, your Visas, your MasterCards, your Amexes, your debit cards, and more recently, your kind of buy now, pay laters, your Klarnas and things like that? What needs to happen for pay by bank to kind of be there alongside it as another option pretty much everywhere?
Right. I think it's very much a function of time in a way, and enabling a lot of like incremental use cases. Like we tend to look at payments as some sort of like is a single use case, like you have to pay. In reality, there are so many different flavors and variation, different AOV, which means like transaction size, is credit, is debit, is offline, is online, is high frequency, is low frequency, discretionary spending, no discretionary spending. So we need to go and enable all those different use cases. By and large, we believe that Pay by Bank is a merchant-led revolution. So it really means that the merchant has to take a little bit of a leap of faith, put that in front of consumer, and create incentives so that consumer can make the switch. It's also true that payment is a habit-forming sort of platform. So what we see is that the moment you have done your first payment, then like retention for any future payment is extremely high. It's like more than 80-90%. So it really means that it's all about like having the first bite. And then probably you're not going to switch for something else, at least for a specific use case, right? So then it becomes a problem of like how many merchants can go and start processing transaction on top of Pay by Bank. There are some gaps to close. I think one is credit. We have been announcing our own credit product. I think it's incredibly important that we bridge both debit-based transaction and credit-based transaction. And the other one is offline. So you need to be able to walk in a shop and make a payment that is not necessarily Visa and MasterCard. And how that will work out, this is stuff that is at the moment being thought through.
You mentioned incentives that merchants will offer consumers to get them to kind of use this payment method, but unless I'm mistaken, you're not allowed to kind of charge differential pricing for someone if they use a credit card or if they pay by cash or if they pay by other payment methods. So what kind of incentives can they provide?
Yeah, sure. I think like merchants have a lot of ways to incentivize adoption. There are sometimes like just graphical enhancement where merchants can highlight what are their preferences to a large extent, like even checkout placement. We see that has a huge impact in terms of adoption. The other one is, merchants, they have a lot of like promos and discounts and loyalty points that they can give if certain conditions are met. And payments can be one of those, right? So what we find is that a lot of merchants, they actually end up using their loyalty scheme, for instance, to incentivize certain payment habits.
Okay. And I mean, there's a lot of talk right now about AI agents, especially when it comes to, financial decisions and shopping and things like that. Will that change the direction of travel in terms of, any shift from cards to, other forms of payment? Or will it just kind of be a digital equivalent of what humans are doing anyway? Or is it going to result in a marked shift in the way that things happen, perhaps opting always for the most efficient, cheapest way of doing things?
I think that AI-driven shopping is gonna be more rational than humans.
We
Uh,
shop rationally, don't we, when we see something we like?
yeah, maybe. I don't know. Myself, like I'm not very rational, like in front of a nice website advertising things. But more in general, when it comes to payment preferences, we tend to form an habit, as we said before, right? I don't think that people wake up in the morning thinking, "Oh, how lovely is that? Today I'm gonna pay with my card," right? Like it's just not a consideration. So it's an habit, and this habit sometimes is very rational because you get maybe more points, or you have some credit attached to it, or it's just easier and more convenient. Sometimes it's just like an habit, like is the thing that you have done so far, and it's not necessarily better for you, doesn't maximize maybe some, again, reward or kickback that you're getting, right? And same thing is for merchant, because on the other side, the merchant wants to sort of like close the sale no matter what, right? And so to a large extent, like their preference will be to go into the payment method that lowers the fees by keeping conversion rate as high as possible. So in a world where you have like two highly rational agents on both sides of the merchant and consumer, basically there could be an extremely rational protocol telling both sides, this is what convenient for me as a merchant, this is what is convenient for you as consumer. What it becomes a trade. What do I get back in order to lower maybe your cost of payment on the other side? And also, what is the preference for the merchant to a large extent to have a payment method that guarantees them in a world where I would say risk management, it can be really important.
Okay. So look, Francesco, I want to try and get through two more questions in this section. So try and keep the answers a little bit concise if we could. I mean, when we're talking about payments, how obviously stable coins have been a very buzzy thing of late. Does this change your calculation? Are you kind of already, are people in the payment space, such as yourselves, already kind of preparing for the kind of stable coin revolution when they become more widespread? What impact are stable coins likely to have in the payment space?
Yeah, it's already having an impact on cross-border payments, like how fast you can move money around the world. Effectively, it ends up being the real-time settlement network across different countries that at the moment we simply don't have. And I think it goes into a wider dynamic of removing intermediaries, which is something that we really like. So I'm really bullish on stablecoin.
Okay, and now you're an Italian, you're in London, you've got one foot in Silicon Valley, even though you don't, have a chance to surf at the moment. What's the key strength and the key failing of each of those three places when it comes to fintechs? So,
it's a good question. Okay, so I think London, clearly the strength is just like the history. I would say very depth. A huge depth of just like people that have been here, done it before. So you just have like that source of like incredible knowledge and background, and everybody knows kind of like the past and a little bit of the future. Clearly is extremely competitive. On the other side, I think Silicon Valley starts very much from a product point of view. I think like they're not necessarily expert about everything financial services, but I think like it's always about like what is going to be the best product that scales faster with the best possible product experience, if you want. I think Italy, what we find is that it's an untapped pool of talent. Frankly, there's so many young, eager people that really they are incredibly well trained and motivated, and they have a lot of passion, and they want to work with great companies with like international appeal and do great work. So maybe we're trying to put everything together here at TrueLayer.
okay. Well, we didn't get to the failings of each one, but maybe that's a good thing. We'll keep things positive. I did actually read when we had earlier this year, the IPO of Bending Spoons in the US. And I think I was reading that it's harder to get a job, harder to get hired at Bending Spoons than it is to become an astronaut. So there you go. Nice little, little stat for you. But look, it's time now, Francesco, for our round of rapid fire questions. Are you ready?
Let's go.
Okay, wonderful. So I'm just fiddling with my phone to get 90 seconds on my clock. We'll get through as many of these questions as we can. Just one-word answers, okay? One-word answers is all I'm looking for. I'm going to start the clock and then we will begin. Okay, what fintech segment has the biggest potential over the next 5 years?
Payment bank.
What is the biggest pain point in your everyday financial life that you would like to see resolved?
Forecasting.
Are bank bosses ready for the AI revolution?
No.
Are customers ready?
Yes.
Have regulators in Europe and America kept pace with all the new possibilities and behaviors we're seeing in the financial industry?
No.
Have you personally ever invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
Yes.
Are bank branches part of the future of finance?
No.
On a scale of 1 to 10, 10 the most likely, 1 the least likely, how likely is it that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank out of 10?
8.
That central bank digital currencies, CBDCs, become a mainstream reality in the US or the European Union?
5.
That you'll be able to open a crypto account at a top-tier bank?
10.
That SWIFT will still be the main tool used for transferring money around the world?
7.
That a new card or non-card-based rival will emerge to challenge Visa or MasterCard?
10.
That we will see a top-tier bank or insurer bought by a fintech?
7.
Okay, amazing. I think that's the fastest time ever that we've got through all the questions. Just going to hear the alarm go off. There we go. But that is all we have time for our round of rapid fire questions, not least because you got through all of them, but also for our conversation. So I really just want to thank you, the co-founder and CEO of TrueLayer, Francesco Simoneschi, for taking the time to speak with us today. Thank you so much.
Thank you, Elliott.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye. Ciao.